On Wednesday, the U.S. reported consumer inflation of 9.1% for the year through June. That number, a four-decade high, rattled markets as stock indices sank. But investors need to get used to inflation, says billionaire Thomas Peterffy, the 77-year-old founder and chairman of online trading platform Interactive Brokers. I believe inflationary pressures will continue for years, not months, Peterffy told Forbes over video chat, calling from his home in. This is not a short-term issue. According to Peterffy, who is worth $18.1 billion, there are several reasons why inflation is here to stay: decades of chronic U.S. deficit spending, ongoing disruption in supply chains as globalization reverses, a shortage of skilled workers and increasing auto. This is a vicious cycle that will eventually result in exploding debt. A majority of traders expect the Federal Reserve to raise benchmark interest rates by at least 75 basis points, or even 1 full percentage point, later this month. Last month's 0.75% rate hike was itself the largest in 28 years. But Peterffy does not expect to see a repeat of the 1980s, when Federal Reserve Chair Paul Volcker jacked up interest rates to double digits, inducing a crushing recession but stamping out inflation. I do not believe the Fed will follow through on its do-what-it-takes promise to bring down inflation. Instead, according to Peterffy, the Fed will cap benchmark rates around 4% and as a result, inflation will hover around 6% for the next several years. There will be stagflation for a while, he predicts. Peterffy, despite his gloomy predictions, expects U.S. equity markets to hit bottom as soon as the fall. He suggests the S&P 500 could drop to as low as 3,000 around October, a 21% drop from its current value of about 3,800. The S&P 500 index has already slumped more than 20% from its record high last November. Eventually rising prices will catch up with stocks, insists Peterffy, and as a result, stocks will enter a long bull market period propelled by inflation. The brokerage pioneer adds, "This is a great time to." In January, Peterffy said investors should consider holding 2% to 3% of their wealth in crypto to hedge against fiat currencies going to hell.